Hi, and welcome to the Stock Scores Market Minutes for December 17th, 2018. This week we're going to talk about the time to change teams. I'll explain what I mean by that in just a moment. Plus, I'll provide my regular weekly market analysis, give you a couple of stocks to consider, and then look at a recent day trade, the trade of the week. Let's get right into the topic for this week. When to change teams? Well, when trends change, so should your trading focus, because fighting a trend is a hard way to make money trading. So what I do is I first analyze my expectations for the market's trend, and then I focus my search for trading opportunities that fit with the trend. In other words, if I think that the trend is going to be up, I look for buys. If I think the trend is going to be down, I look for shorts. If I think that the trend is up too much and overbought, then I will look for shorts as well. I also define what will prove me wrong. So in other words, if I decide that I'm going to be short that day, what would have to happen for me to realize that that is the wrong approach, and what will I need to do to change to the opposite direction? When the trend changes, ultimately I reverse my approach. Let's take a look at a chart, the 5-day, 5-minute chart for the week, and I'll just take you through some of my thoughts on what I did this past week. For example, on Friday, the market gapped down to the bottom of the channel, pretty oversold, so I was a buyer on the open. And that worked for a little while. The market was moving higher, but then here it broke that upward trend, and so I switched from being a holder of longs, a holder of buys, to now being a short seller. I short sold the market and carried those shorts through the day as that was the prevailing trend. Another example up here, the prevailing trend was up, but when that trend was broken, my approach switched from being long to being short because the market was telling me that it was likely to move in the opposite direction. So whether you're day trading, swing trading, position trading, you always want to keep that idea in mind. Trading with the trend, don't fight it, use it to your advantage. All right, let's get into this week's analysis of the markets, beginning with the US markets, S&P 500. And here you can see we've had a lot of volatility. We finished the week on a fair bit of weakness, moving it down to the lows there. We haven't really broken that support. However, on a closing basis, we have closed at a lower price than we have closed for the week, going back, I think, to May. So that's a pretty significant turn of events. We have falling tops, and therefore we have reason to be fairly pessimistic right now. Looking at the longer term chart, and there you can see that closing below the lowest price going back to the spring, right in there somewhere, maybe it was March. And that's a negative. We haven't really gone through this support zone, so I'm not yet ready to, say that we're in for that next sharp downward move, but certainly the bias to the downside is there. I think it's working as follows. The market is negative, the market is pessimistic, and it will continue to move lower until there is a real catalyst for positive change. So in other words, if the US and China agreed to a real substantial trade deal, removal of tariffs, that sort of thing, and not just, sort of things for the sake of getting the media excited, but something real that the market will believe in, I think we're ultimately going to drift lower. With that said, one news announcement from the US government or the Chinese government or both could be the real change that the market needs, and it could cause it to move very quickly in the other direction. So we've got lots of uncertainty. That's why we've got all this volatility here. You look at the height of the average weekly range, much greater than what we had prior to the correction October 4th. And so that shows investors are uncertain. And until we get some catalyst for positive change, expect that uncertainty to continue. Looking at the small cap stocks, they have broken through that support zone. We closed below it here. We've got falling tops. This looks like a market destined to go lower. The next level of support is down in that area there. Not too far away, but we could continue to move lower and continue to take out areas of support unless there is some positive catalyst for buyer interest. All right, looking at the Canadian markets, pretty similar, but I would say a little bit weaker. We also had that negative end to the week. We're also right at that support. We also have pessimism building on the chart. We know that because of the falling tops. And so really no reason to be optimistic until we can start breaking downward trend lines, building rising bottoms. And that's just not there yet. At the longer term chart, we have that long-term sideways pattern, and we're really getting close to threatening a breakdown through support that really goes back into 2017. So we need to watch to see if that support zone that has been touched a number of times, if we ultimately break down through it, that would be quite negative for the market. Until it does, I'm going to remain neutral long-term, but definitely want to be cautious. Looking at the TSX Venture, really just weakness week after week after week. No reason to step in front of this downward sloping trend. Just wait until the buyers start to come back. They're not there yet. So I would be very cautious with Canadian small cap stocks. Looking at currencies, or US dollar continues to be the strong currency here, moving to new highs, local highs again, getting close to that longer term resistance where it will probably get stuck, but we could easily go up for another month or two before we hit that zone. So we'll just remain bullish on the US dollar for now. Of course, with a bullish US dollar, you would expect the Canadian dollar to be weak, and it is. We're still in that downward trend. We have actually closed below that support zone, not decisively so I don't think it's too major yet. But again, there's no sign of buyer interest here, and therefore you want to be negative of the Canadian dollar. Looking at interest rates, we had that jump the previous week, which this is the jump in the bond market, which meant interest rates went lower. Markets sort of pricing in expectations that the Fed won't raise rates as much as originally thought. We are now at the downward trend line where you would expect to get stuck and roll over. We'll see if that happens. If economic numbers start to look weak, market starts to think that, hey, maybe interest rates aren't going to go higher, then we should see a break of that downward trend line. That's what you want to watch for near term. On to commodities. The gold market gave us a decent signal 2 weeks ago. There you can see that little pennant pattern. We traded inside the range this week, pretty typical after a strong up week. The question is, do we continue to maintain those rising bottoms? I think as long as there is uncertainty in the market, people are looking for some safety and they are going to gold. As soon as the market has a reduction of uncertainty, I think gold goes back down. So it's really a short-term trading vehicle as a hedge against market uncertainty for now. Onto the oil market. Well, it stopped going down. That's, I guess, the bit of good news that you can say. We've had perhaps 3 weeks here of sideways trading. Stop going down is better than going down, but it certainly isn't going up. And until we can break that downward trend line, I want you to be fairly cautious with oil. All right, so my outlook then, US stocks, neutral long-term, bearish short-term, same for the Canadian market. Both of these markets could go bearish long-term as well very quickly. Gold, bullish on both time frames. Oil, bearish in the long term and neutral in the short term as it is trying to stabilize somewhat. Uncertainty continues to live in the hearts of investors, and that's causing extreme price volatility. The lack of trend makes trading difficult for trades longer than a day, and even challenging for day traders who really have to pay attention to those intraday trends and those intraday trend reversals. It's a great market for a short-term trader if you can stay on top of the trend and trade with it. Because there's lots of volatility, you just got to be willing to switch teams very quickly. Gold is still interesting. Oil is trying to stabilize, but it's really not yet showing any sign of buyer interest. All right, let's take a look at a couple of stocks to watch. It's a little bit hard to find things to consider right now because of the state of the market. This one I thought is an interesting weekly chart. This is Novavax, and I've actually featured this in my newsletter once or twice in the last few months because it's been doing pretty well, and it had a decent week last week. It's coming up to this resistance level right here, which may stall it short term, but I like that in a very uncertain market, this stock is actually able to build some optimism, and perhaps it is slowly building its fundamentals again after this real negative period back there in 2016. So that's one to keep an eye on. Finally, another thing to consider if you think that the market is going to go lower is this ETF. It is an inverse ETF based on the Russell 2000. So if the small cap stocks in the US go down, this will go up. And you can see it's been moving higher. But given that the small cap sector broke down before the large caps and has broken This essentially means that the small cap stocks have broken down through support. This is breaking up through resistance. Good hedge against market weakness. If that weakness continues, you're going to see this thing go up. Just keep in mind that this is a leveraged ETF. Make sure you understand how those are priced. All right, let's go on to the trade of the week. Again, this for educational purposes, but on Friday, I was long at the open and I switched to short and shorted a number of stocks. This is one of the stocks I shorted because when the market went negative, this one, which was already negative for the day, broke down from a with an action candle there from sort of a negative pattern as we had pessimism building. Shorted it there, rode it for a nice little move to the downside, just demonstrating that even if the market is going down, there are ways to make money. You can short individual stocks. You can buy some of those inverse ETFs that I've talked about. There's always a way to make money, especially in a volatile market, as long as you are on the right side of the trend. Well, that has been the Stock Scores Market Minutes for December 17th, 2018. I probably won't be doing a video for a week or two as we are going into the holiday season. I may do an update. I'm off on a trip to Australia, so I'm not sure how accessible or how much access I will have to upload videos, but if you don't hear from me for a week or two, that's the reason why. I want to give everyone the best wishes for the holidays, and as always, trade well.